Hello, good afternoon, everybody. Thank you for joining me here on this Intuit webinar about best practices in preparing a new set of books. My name is Elaine Orr. I'm a certified professional bookkeeper, and I have over 35 years of experience in accounting and bookkeeping. So you know, I recognize that there's a lot of things that about starting a new set of books that may be a bit daunting. There's lots of questions around it. When I first started doing bookkeeping, I was quite happy to take over a set of books and I could keep them meticulously, but I really didn't want the responsibility of having to set them up correctly. So I hope in this webinar today, we're going to be able to give some of you a little more confidence in that area. So to break down the webinar and what we're going to cover this afternoon, we're going to start with the occasions when you might want to start a new set of books. We may all have come to that point where we think, oh my goodness, it would just be better starting again here. But we'll cover a few points about that. And then we're going to look at assessing your client's accounting needs. If you are going to be setting up a new set of books, what might you need for your client? What sort of things would you have to put in place for them? And what would the chart of accounts look like? And then at the end, well, the next thing that we're going to do is we're going to get into actually setting up the books themselves. So if you've never done anything like that, I hope this will make a difference to you. And at the end, we've got time for questions and answers. So, and the chat's always there if you've got any questions while we go. Okay, so why might you start a new set of books? Well, the first thing I want to say is that with QuickBooks, you don't have to start a new set of books every year. Like QuickBooks is, you don't even have to officially close the year and roll over. There's no action that you have to take for it all to roll over into the next year. QuickBooks is very good at, once you've put in what your fiscal year is and the company information, QuickBooks is very good at collapsing the accounts that need to be collapsed, rolling over numbers like the retained earnings and the balance sheet accounts. So you don't actually need to start a new set of books for every new year. But some of the times when you might want to start a new set of books is, of course, if it's a brand new business entity. You might, like if they've never had any set of books at all. I work a lot with startups and entrepreneurs, and if you get someone coming to you, hopefully they come to you early on before they've got a lot of business transactions, then you're definitely going to want to set up a new set of books for them. Another reason is if it's an existing business, but the books have never been kept in accounting software, before. I've had a couple of occasions where I've come across that in my life, that I've had to take over books from people. I've had companies that were on Excel, and I've decided that they needed to be put into QuickBooks because Excel is really not enough to keep concise double entry books. And I've actually taken over in recent years. This isn't back in like, the 1970s, but in 2010 I took over a business that was still keeping everything on big green ledger books. So, of course, I computerized them and I took all the figures that they had in their big green ledger books and I put it into QuickBooks for them, and I started training them on how to use QuickBooks. And they've been doing that ever since then, and their accountant is much happier that they get something in a proper income statement, proper profit and loss, not just on those big green ledger books. So Another reason is if the business wants to move to QuickBooks from a software that doesn't currently convert. Intuit has the ability to convert a lot of software. You can move from desktop, and I think there's the ability to move from Sage as well. But there's other softwares that you may have been using that you can actually easily convert it over and keep your history. So at that point, you'd probably want to start a brand new set of books in QuickBooks and just drop in your starting balances. And here's the big one. If the books are in such a mess that beginning a new file is easier than doing a cleanup. I know that it's tempting to do that, but I've never actually found that I couldn't clean up a file, especially with a lot of the accountant tools and things like that that Intuit has. So, but you may come to the point where you just think, okay, it's been a complete mess, and I want to move on to starting up a new set of books. So those are the occasions that I can think of that you would want to start a new set of books. So going forward, the next thing that you'd have to do is establish what kind of QuickBooks does your client need. The first question nowadays that I ask my clients is to find out if they're a good fit for QuickBooks Online. When QuickBooks Online first came out, there was well, certainly in Canada, there was quite a few reasons why a business wouldn't be a good fit for QuickBooks Online. Especially if they had complicated inventory needs, or they had well, one of the things that would still keep someone off QuickBooks Online and at this stage is if they need discounts by line items. I ran into a client that had converted to QuickBooks Online, but they needed to send out invoices and discount one particular items, and right at that point we don't have the ability to do that in QuickBooks Online. So have a good discussion with your client and find out whether they're a good candidate for QuickBooks Online. Are they tech savvy? That's one of the first things. Are they tech savvy? Are they willing to move to the cloud? Can they work collaboratively with you? Do they have remote staff that may be accessing QuickBooks from on the road? And one of the other things that I would really look for to establish if they're a good fit is, what about their level of security? Are they willing to enter their banking details, to hook up with all the cloud technology and everything that there is? I recently came across a client who was so worried about security that they have never given their bank information to anybody, and they would not share it with Intuit and QuickBooks Online and put that information on the internet. They don't even do online banking. So at that point, of course, I had to put them on desktop because they're obviously not a good fit for QuickBooks Online. Then one of the other things, once you've established whether they're a good fit for QuickBooks Online or not, is I sit down and I have a good discussion with them, and I have a really good client interview. I know that you can do this remotely or you can do it in person, but I really like to go, if I can. I like to sit down with the client, have a cup of coffee, visit their place of business, see what it is they do, let them show me what it is that they're passionate about, just the first thing I ask them is, what do you want to know about your business? Because many business owners don't even, they think, well, I want to know how much money I make and that's the most they can break it down for you. But a few questions within there, you'd be able to break it down into do they track particular sales and different items of that they sell? So when I took over a consulting business to do the books for them, it turned out that he did training and he did consulting, but he just had all these revenue going into sales. But he also had subcontracting for his training, so he wasn't really getting a clear picture on his books how much money he was making from the training, because he wasn't tracking it as a revenue separately from the rest of his business. So at that point, I was able to start, when I have this conversation with business owners, I'm often, while they're talking, and it's not hard to get a business owner talking about their business, but I'm often building a chart of accounts in my head. You know, and I hear them talk about what it is that they sell. I'm thinking, okay, we're going to need a separate item for that. We should have a separate account for this. Then I start to get into them with, do they have different locations or departments? So you know that in the QuickBooks Online Plus version, we can turn on locations, so that if a business owner has more than one location, you can track it that way without having to use classes the way that we used to do that. Then I ask them, do they buy items that they resell? Of course, at that point, I'm looking for setting up the cost of goods sold. I ask them if they deal in multiple currencies, and then you know, which we'd have to turn on multi-currency. And then I start to ask them if they'd like to track any more expenses in more detail. So one of the things that, here's an example of a business owner that I set up their chart of accounts for them in quite a specific way. When I took over a florist store that I do the bookkeeping for, they had their chart of accounts set up that they had income from weddings, income from funerals, and income from giftware. But I asked them what they bought to make that revenue. And the business owner was able to tell me that she bought fresh flowers, she bought artificial flowers, and she bought the giftware. So having the revenue categories as weddings and funerals didn't help her track her cost of goods sold for the items that she was purchasing. So I set up revenue accounts that exactly matched her cost of goods sold account, her purchasing, so that she was able to track. We had sales from fresh flowers, sales of artificial flowers, and sales of giftware. And then we had cost of goods sold items for fresh flowers, artificial flowers, and giftware. But then what happened to the fact that she wanted to know how much money she was making from weddings, how much money she was making from funerals and corporate events? Well, we set them up as classes so that we were still able to track her revenue, track her cost of goods sold, and you could drill into it a little bit deeper with the classes, and she could see how much of her business came from weddings, how much came from corporate events, and how much of it came from funerals. So that kept everybody happy, and it was a good way to use the functionalities within QuickBooks to be able to set that up. So how do we go about getting all of this started? Once you've asked the questions of your client and you've listened, you need to listen really well to what your client's got to say, because sometimes they'll you know, there's things that they won't think that they have to particularly tell you, but you know, they haven't mentioned a method of payment that they maybe take take Stripe or Square or Shopify, or they won't think of the things that are relevant to you. So when you ask the questions, you have to get really quite deeply into it, listen well, and take good notes. But when we're getting started, I'm assuming we've all signed up for QuickBooks Online and we've got the QuickBooks Online dashboard. So we're going to go into clients on your QuickBooks Online dashboard. You're going to add a client, and then from there you're going to enter the client's name and choose the version of QuickBooks that you need for them. If they're a very simple company, like one person, they don't have any accounts receivable, accounts payable, they just have use their debit card, they just use your credit card, they don't have any bills coming in, you may be able to set them up in Easy Start, but for the most part I've found the reporting and the functionality in Easy Start isn't really what the kind of clients that come to me for their bookkeeping would be using. It's not really a good fit for the type of clients that I would be helping with their bookkeeping. And we go in and we enter all the company information. And once you've got that in, their name, their the company, the business number, what type of business it is, then we're ready to move forward to setting up the chart of accounts. So the first thing I would do is I would go up to this dashboard here. This is under the gear icon, and I would go up and I would go in here and set up the so this is where I would set up the accounts and settings, and all the information would go in there. But this is where I would go in to start setting up all the lists, the chart of accounts, the vendors, and everything. You can see all the lists that are here that we're going to be able to start setting up so that we're customizing a chart of accounts for somebody. So we have products and services. You're going to need that. We'll come back to that a little bit later. We have where you might want to add users. That's under your company at the left-hand side there. You can add different users within your company and give them custom access to your QuickBooks. So if you just want somebody to pay bills for you, you can give them access to that, and they don't need to see the rest of your company information. But all of that is under the gear icon in setting up lists. In the company settings is where we're going to get into some advanced. You're in the advanced tab here on the company settings, and this is where we would go in and either track classes or locations depending on the information that we've got from our business owner when we had that in-depth conversation with them. Sometimes tracking classes is enough if they actually don't have locations. When we use desktop and we didn't have locations, I used to have to use the classes for different locations, and I would run a profit and loss by class. Like I had a Curves franchise, a gym that had 2 different locations, and I would use them on desktop. I had the classes set up with the 2 different gyms that they had, and for me to give them a profit and loss to let them know how each gym was doing, I would have to use the classes. But now we don't have to sacrifice using classes to track locations. We can get right into the classes and use them for whatever field you want: weddings, funerals, commercial, residential, anything like that. But we can still use the locations on top of that. So that's one of the beauties of QuickBooks Online. I actually took over a set of books in 2014 where it was a fairly new company, but locations, she had 2 different businesses running under, they were all just running under the same business number. It was one corporation, 2 completely separate different physical locations and 2 completely separate businesses. By using locations and by recording all the revenue, all the expenses, all the wages and payroll to specific locations, when the time came that she was ready to spin off and sell one of those businesses, we were able to produce a completely separate P&L that showed the potential buyer exactly how much that one business entity was making, not the whole corporation. We didn't have to reveal everything or any details about the other part of the business, but we were able to just run a P&L that showed her exactly what it is she would be buying and how much money that business made at the end of the year. So that was a really good reason. We were very glad that we had turned on locations for that person, because it worked out really well for her. So this is where we get into the chart of accounts. Remember, you could access that from your list here on the left-hand side, just on the column under your company, that we can access the chart of accounts. And this is where we go in and we can begin to add new accounts depending on what we've been able to set up, what we've decided is essential. These accounts here, these are the basics that you're going to get with every QuickBooks file. You can't make these go away. But you can rename them and use them as other things. But these are the basic accounts that you will get, and from them, it's like, it might seem a little intimidating to come in here if you've never set up a chart of accounts before. It might seem a little intimidating to come in here and find this almost blank, and that's, you know, when you start to think, what do I do now? So I always start with adding the bank accounts and credit card statements, the credit card accounts in here, because most businesses will at least have, you know, they're going to have a bank account, and that's the first thing that we're going to add. So after we've started adding, excuse me, I'm just going to go back there for a minute. After we've started adding the chart of accounts, and we've got the balance sheet accounts, the banking, and the maybe you might want to turn on put an undeposited funds account as well if someone collects a few payments together before they deposit them. But once you've added the bank accounts, then I start to get into customizing the revenue accounts, which may be as simple as just sales. Like, I have a retail store and he doesn't have any specific items that, you know, he tracks differently. It's not like a consultant that might do consulting and training. It's not like maybe my own company where I track regular bookkeeping work as a revenue account and consulting work as a revenue account as well. But the revenue accounts are where you can really customize it for your client. And when they've answered the question, what do you want to know about your business, the revenue accounts will pretty much fall out from there. I would say I've been able to keep the revenue accounts to round about like no more than 3 or 4, really, and I can make use of products and services to get down into the nitty-gritty of it. Don't add a revenue account for everything that they sell. That's what you would use the products and services for. After the revenue accounts, the expense accounts will probably be pretty much, I find the expense accounts are similar from one business to another. Like, everyone's going to have postage, everyone's going to have office supplies, everyone's going to have bank charges, you know, so you can get in and set these up in your chart of accounts. And the important thing to remember is that this is just a framework. You can come back to it at any time. You can change it. You can merge accounts. You can make accounts inactive. But get the framework of it in there, and once you've added the bank accounts, ask your client to connect them to their bank so that they can bring in the bank feed. But you'll start to build out on here, and you can always add accounts on the fly as well. Like if you find yourself in an entry and it's a new expense that you realize you hadn't added an expense account for, you know, like maybe he has travel that he never had travel before, or he's hired staff or subcontractors and you haven't added that, you can always add that on the fly as you're making the transaction. So the next thing we're going to look at is we're going to add suppliers. That's the next thing that we have to do. If you already have, you can build your list of suppliers as you go. Every time you enter a bill or an expense, if it doesn't recognize the name, it will just ask you to add it as you go. But one of the neat things about this is most businesses already have a list of who their suppliers and vendors are that they deal with. If your client has been using another software, or even if they've just had it in Excel, you may have all of this information already that you can go in and you can use this as well as adding suppliers individually as you go. A great feature is that you can go in and you can do this. If you've got your suppliers in an Excel or CSV file, you can import the vendors and you can populate your list from whatever information that you already had. This is what would be good to use if your business owner has been using a software that doesn't convert, but you already have from their old software, you have a list of who all the vendors, contacts, suppliers were. You can come in here and you can upload all of them and you just map it. Oops, wrong thing. You map it to map the Excel file that you have to the vendor columns that you will need. So one of the other things that you're going to have to do is set up products and services for what you sell. You can do this for what you buy as well, but you have to do it for what you sell, because when you enter an invoice, it will ask you for an item. You don't post an invoice directly to an account. You have to post an invoice. You have to put down what the item is. So if you have, perhaps you've set up an income account that is cleaning revenue, then you also have to have an item, a product or service that is called cleaning revenue that feeds into that income account. That's the only way you're going to make any sales into your income revenue accounts, is by using invoice or receipt module, sales receipt module, and both of those forms are going to ask you for what product or service, and when you enter the product or service, it will automatically feed the sale into the correct income account that you've used here. If anybody's got any questions, just let me know as we go along. So this is where we're importing the lists. And you may have lists of items as well. If you're converting from another software, you've probably got things that you were selling. So you could have lists of suppliers, you could have lists of customers, you could have lists of your items, and you may even already have a chart of accounts, and all of those things can be imported from a CSV or Excel file. So it's really handy when you choose to upload that file. This is the window that you will see, and it just wants you to go through and say, so the QuickBooks will be looking for the name. Which column of the CSV do you want to map to the name field? Which column do you want to map to the company field? So you can bring in all your suppliers and all your information. Sometimes I've found that people are hesitant to change software to QuickBooks because they think, well, I've got all that history, all my contact information's in there. Am I going to have to sit and type, like 500 vendors and suppliers in there? No, you're not. We can always access them. We can download it into Excel. We can upload it. In this mapping, it's very, very simple. I'm not an advanced Excel user. I would say I'm just average Excel user, but Intuit makes it so simple for me to come in here and do this mapping, for me to be able to bring in any lists that I want from the previous information that I may have had in whatever format it was in. And before you click import, you're going to get the chance to review everything. Like sometimes there can be duplications. This is where you could check them off on here that you don't want to bring them in. So again, it can be a good time to clean up your list too. So we can check them all off on this before we click go ahead and import them. And even then it will say QuickBooks is about to import all your data. So you can do the same thing here with your customers. Add your customers to keep track of who's paid you and who owes you money. If you're rolling over from another software company, it's a good idea to bring this in, and then you can set up immediately who your receivables are, and you don't lose that information as well. Again, very simple. You can upload them in an import file. And then don't forget, though, that you can drop them all into the chart of accounts and set them all up with your opening balances there just from the lists file. So once you've got your lists all in there, whether you have manually entered them one by one or whether you've been fortunate enough to have them in a format that you can import, then you're going to want to go in and set up what the opening balances are. So I made this one up here, but so I use a journal entry to set up the trial balance from the last fiscal year or the last tax return filed for the balances that we're going to need to have in the new accounts. So I would set up the checking account, and I would set up what the Visa balance is, any expenses that we already have, and as you can see, we've got the retained earnings all ready to carry forward. And once I've entered all of these things, of course I'm going to make sure that it matches the final trial balance that we have as it was filed, as the accountant filed it with the government. We can't touch that last fiscal year, but we can bring over all the figures to start afresh. So one of the things that I did want to point out here is that with the accounts receivable and the AR figures and the AP figures, you're not going to want to just drop them in as opening balances. You're actually going to want to, and you see on this journal entry here that I'm setting them up in, one of the beautiful things about QuickBooks Online is that you can have more than one AR line entry. You can have accounts receivable on 2 different lines. You can have accounts payable on different lines too. In the desktop version, you can only use accounts payable once or accounts receivable once, and it has to be at the top of the entry, so it's a little bit pernickety. But on QuickBooks Online, you can see that what I'm doing here is, rather than just dumping in the total of accounts receivable from the last trial balance that we had, I'm actually breaking it down into we owe Really Horrible Enterprises. That's a real company, by the way. I'm sure he won't mind me mentioning that. That we owe Really Horrible 3,302 that we owe Bareface Design, 983, you know, whatever the figures are, that's going to roll into your chart of accounts, but at the same time, you're actually setting up the payables so that when you go in to pay that bill will be there for you to pay. So you're tracking your payables by customer, by vendor. You're not losing track of any of the detail. So you can set up a fairly detailed journal entry to bring in the figures that you need at this point. So points to remember, like keep it simple. There's 5 or more, I think it's 5 different levels of hierarchy that you can use in QuickBooks Online. You've got the chart of accounts, then you've got customers, you've got products and items. Like, I often find now that we collaborate with our clients much more than we did in the desktop version, I often find that my clients have gone ahead and they've added a new revenue account because they started selling something different. So if we take the florist as an example, and I have giftware as her revenue category, and then she starts selling a particular item like socks or bags or you know, scarves or whatever, I might find that she's gone in and added that as a revenue account. So I have to watch for that kind of thing and go in and make sure that we take it out of the revenue account. We don't need a separate revenue account for every item, but the correct place to track that is under products and services. And again, we're going to have it feeding back into giftware. But if she ever wants to know how much of each item that she sold, you can run a report in products and services so that she can find out how many socks, how many bags, how many you know, arrangements, Christmas arrangements that she sold. Those kind of things don't need to be their own separate revenue. So so keep it simple. Put in your bank account, put in your credit card statement, set up any liabilities that you have, add 1 or 2 revenue accounts. Remember, you can always change this afterwards. And then as you get started, you'll begin to build upon the framework of the things that you've been able to set up. Take advantage of the products and services, the classes and locations, the customer names to keep, and even sub-customers as well. You can set up sub-customers. So take advantage of that to get all the reporting that you need without producing a lengthy chart of accounts. There's nothing worse than looking at a trial balance that's like 2 or 3 pages long and it's got duplicates for things. An example that I can think of is when I set up a church in QuickBooks, and their chart of accounts, their trial balance was like, it was pages long, but they had under their expenses, they had children's ministry, supplies, you know, office expenses, outings, and then they had another chart of accounts, and another expense account was youth ministries, and then they had one for women's, but there were so many duplications within these expense accounts that they had. You know, everyone had supplies, everyone had outings, everyone had refreshments. So I really pared their chart of accounts down. I pared all their expenses accounts down, and I made supplies an expense account. But I used classes to say, okay, this is adult ministries, this is children, this is youth, whatever, you know, whatever they were tracking. But I didn't have all the ministries as separate account items, separate expense accounts. I did something very similar with a large sporting organization, a national sporting organization that had, you know, it had 4 or 5 different tracks within that sport. Like they had the Paralympics, sports, you know, they had a coordinator in charge of each different part for that. And when I found their chart of accounts, it's so unwieldy that I didn't even want to read it. With my years of accounting experience, I really couldn't see a board of directors sitting down and reading it all. So again, I simplified it. I reduced it to as few expense accounts as possible, and I used the classes so that they could read across the way and find out how each track within that sport was doing, and they could also get the total at the end. So make good use of your chart of accounts, your classes and locations. The other thing is, it's just going to confuse your clients if you've got too many of them. So I actually tell my clients not to add new accounts. They can add new items, but they're not to add new accounts. And even when they add new items, I have to make sure that they are pointed them towards the right income account, which, you know, often it's not. And I'll run an income statement and I'll suddenly see that we've got grant revenue, but it's just because somebody set up a new item to sell and they put it towards grant revenue because they didn't check what income account it was going to. So your client is definitely going to add more products than you. We don't know what every item they sell. They're going to do that themselves, but review the accounts that they've posted them to as often as you can. Set that as a to-do list once a month to go in and see if they've added any new items and what accounts they've posted them to. It's easier to merge accounts and products later than separate them. You can separate items and postings within the reclassify in the accountant's dashboard. You can use the reclassify tool and say perhaps I had, you know, they maybe only set up all their sales as one revenue. They only had one revenue account that said sales, but within that, they were posting. Like I have one client that they do window washing in the summer and they do printing in the winter, just to, you know, to keep themselves going until their window washing and house washing business can start back up again. And they had all of that going to sales. So I went into the reclassified tool and I ran just the list of everything that had gone into sales, and then I filtered it by the names of the items that they had for who I knew they were selling the printing to, and really I could do it just by dates as well, and I was able to grab them and move all of those transactions over to a revenue account, particularly for the printing. So QuickBooks makes it very easy for you to be able to merge accounts and merge customers and things like that, so you can set a really, really clean set of books. So another thing just really for you to remember is that the initial setup, it's just a framework. Don't panic over it. There's nothing that you can't undo as long as you've got the bank accounts, the credit card accounts, you know, that everything's in the right place. It's in the right place either on the balance sheet or on the expense account. There's nothing that you can't go in and change. I go in and I change, I edit the categories, I edit the chart of accounts, and maybe I enter what income type it is, and it comes up with a warning that says this will change all your reporting, and if I'm pretty sure that it's right, I just click yes for it to go ahead. So, you know, if you're confident in the accounting methods that you've been using to set things up, you can always go back. It's a very intuitive product. It's very helpful that you can go back and change things later. So that was everything I had to tell you about setting up a new set of books. Again, I do want to emphasize that there's occasions when you would set up a new set of books that you definitely don't have to do one at the start of every year, but if you have to do one, it's best to do it at the start of a fiscal year. And how you can get into QuickBooks and bring in all the information that you need, set up all your lists, set up all your chart of accounts, and once you've got the framework, you can just start working, and it'll build more of your lists and more of your chart of accounts if you need to as you work. So do we have any questions, anybody?
There's one question, Elaine, from Bev. How do
Okay.
bundles work when setting up products and services?
Okay, so how do bundles work in the products and services? I haven't actually had reason to use the bundles in products and services. I think that's a fairly recent thing. We didn't used to have that ability to do that. I can only imagine, I could be speaking out of turn here, but I can only imagine it's like when we used to be able to, when we were setting them up before in desktop, that we could have them, that if we have a few items that we sell together, then you would be able to group them under the one main products and service and sort of set them up as sub products and services under that one bundle. Is that what you mean, Bev? Yeah. Okay. Anything else? I'm not sure I really covered that one for you, Bev. I hope I did. If that wasn't the answer you were looking for, feel free to contact me later, and I'll definitely get into finding out a little bit more about that for you. Do we have any other questions for this? I know I might have gone through it a little bit quickly or skimmed the surface for you, but if there's anything else that you need to know, feel free. We can always cover that.
There's no additional questions right now. Last call to the attendees for Elaine. Please key in your questions in the question section.
So, while we're waiting about questions, one of the things that I wanted to say is I have gone from being intimidated at doing a setup of books, and just wanting the routine of taking over something that was already set up for me. I've gone from intimidated to it being one of my favorite things to do. I love to go out and speak to small business owners, new clients, and find out what it is, how they run their business, what sort of methods of payments that they have going. Right away I might be able to tell them how to streamline things, but from setting up the chart of accounts you get a much more intimate understanding of what the business owner does, what they sell, and what really matters to them. And often I find that I'm the one making the suggestions to them about things that they hadn't even thought that they would like to track. Would they like to track different revenues? Do they want to break down consulting and training, things like that? Do they want to break down commercial versus residential cleaning? So that they can see where most of their business comes from. And through years of experience of setting up different books for different business owners, I can start to point a business owner to the things that would make them more easily able to analyze their statements and make their financial statements a lot more meaningful to them. And like I said, if you begin to start tracking consulting and training, and then afterwards, after a little while, the business owner says, you know what, it doesn't make any difference to me, it's all just services, you can collapse it into that afterwards. You can just collapse the consulting and training that you've kept separately. But it's a good idea to start tracking it at the beginning. So no more questions here?
Not a question, but Nadine said, great presentation, Elaine.
Oh, thank you, Nadine. Thank you.
And one question came in from Raymond. Would you please advise how to enter a meal tip on top of GST?
On top of GST, okay. So there's a couple of ways to do this. So what I do, if I'm not using an expense program like HubDoc or receipt bank, what I do is I go in, if I'm entering it directly in QuickBooks, I go in and I enter. So I enter the vendor on my expense tab. I open up an expense, I enter the restaurant that we went to, or sometimes I just call them restaurants because I don't need the names of every single restaurant that my client visited that he might never go back to. So sometimes I just call them restaurants, and then I put in one line for the meals and entertainment portion. And then I use a special tax code that I've set up called M that only tracks the 6.5%, you know, the 50% of your HST that's deductible. And then I put a separate line for meals and entertainment tips, and I enter the amount of tip there. And I use out of scope or exempt. I should probably, there's probably one that's correct to use, but for the tip amount, so that you will have the tax calculated on what the cost of the meal was, but the tip will be on as a second line item on the expense, and it should come to the total that shows up on your bank feed or on your credit card statement. If I'm doing that within, like if I'm doing that within Receipt Bank or HubDoc, and I'm posting it directly from there, I just override the HST amount. So I put in the whole thing is meals and entertainment. Like say it was $13. I put the whole thing as meals and entertainment, and I override the HST figure to make it just be the HST that they're eligible to claim on that. And then I publish it from there. And it doesn't really separate the tip and the meals and entertainment expense, but it does post it all to it posts it to the expense account, and it posts the correct amount to the HST receivable. Okay, is that all? Any other questions?
There's no additional questions. But okay, I wanted to ask if we can share your contact email if anyone has any questions after the event, or if they just like to reach out to you.
Absolutely. I should probably have had that up there. So you can reach me at elaine@balancesheets.ca. There, Michael's put it up there for us.
Yes, I put it out to everyone if you want to grab her email.
Absolutely. So ask me, you know, this is a real step that takes you from beyond like just a QuickBooks user, you know, and using the functionalities, the sales and paying invoices and accepting payment for invoices. Once you can get into actually setting up a chart of accounts, it elevates your your comfort level and your understanding of what it is that you're doing in QuickBooks and how all your transactions affects the chart of accounts and the financial statements. So if you've really just been, you know, using a basic user of QuickBooks, this is a really good step to take to just get a little bit more advanced with it. So. Okay, well, thank you very much for joining me this afternoon. As we've said before, if you've got any questions, feel free to reach out to me. You know, if you asked a question and you didn't think I was able to, you know, answer it properly, or you'd like some more information, I'm always available. You can always find me. I'm on Twitter at Elaine Orr Biz as well, so you can reach me there. That's one of my favorite ways to get reached. And thank you very much for joining us this afternoon. And as I said, reach out if you've got any questions. Thank you very much.